Good morning, everybody. Welcome to Trading Together. I'm Mel Gacee. Today is Wednesday, January the 28th. It is FOMC day, everyone. We also have some earnings coming out today, later after the close of the market. The big earnings today are going to be Microsoft, Meta, and Tesla. Those three are going to report today after the bell. So that's going to be a big market mover for tomorrow. So we'll be keeping our eyes on that. And I have kind of a special feature today. I'm going to go live 15 minutes before we get the rate cut announcement. And I will stay with us for probably an hour. We'll trade together. We're going to trade the FOMC announcement together. Now, these are challenging times to trade, so I want you to have some support if you are trying to trade that. And I'll be there with you. So we'll talk through it. We may take a trade, we may not, but we'll talk through it. We'll kind of analyze the press conference together, because these are things that really do affect the market quite a bit. Now, there are times when FOMC does not affect the market, but usually it does. Today, the expectation is that we are not getting a rate cut. So most of the market has already kind of placed their bets and resigned to the fact that we're probably not going to get a rate cut. And that's what pretty much everybody believes. However, that's not what moves or doesn't move the market today. What moves the market today is the press conference. Because what the market already understands, we're probably not going to get any rate cuts between now and May or June. That's best case scenario, is what the market is pricing in right now. That could change, but as of now, that's what the market thinks. So that's not the concern. The concern is, what is the committee, the Federal Open Market Committee, what are they thinking? What are they doing going forward? That is what the market is going to be interested in understanding. Okay. All right. It looks like Audrey is here. Good morning, Audrey. Bill is here. Good morning. And if you're here and you haven't said hi yet, welcome, welcome, welcome. This is a place for all traders of all levels. I'm a day trader. I'm a scalper. I have been trading for 20 years. So I coach traders of all levels, but I really love working with beginning traders. So if you're here and you have questions and you have comments, please don't be afraid to drop those in the chat. I really want to answer your questions. There's no such thing as a dumb question. Drop it in the chat and we'll talk about it. Okay. That is that's that. And Gavilan is here. BD is here. Good morning. Good to see you guys. All right. So let's jump in here and take a look at what we've got. And we are looking at, let's get to my other chart here. All right. So we had this drop. What we had was, guys, big new level that we've finally hit. And we've been talking about here on this channel for a while, that 7,000 SPX was the psychological. That has been hit today for the first time in history. The S&P 500 has hit 7,000. Isn't that something? Who would have thought that, right? When we were trading a few years ago, who would have thought we'd see 7,000? Nobody thought that was possible, but here we are at 7,000. So we hit 7,000. And what did we do? We reversed. We reversed off of that, come down about 14 points. So we haven't dropped too far, but we have dropped. So we are watching now to see. Right now we're under the VWAP here. So we're watching to see if we can come back up. We filled the gap. So we had a gap at the open. Now remember, what gap means is there's air between yesterday's close and today's open. So here's where we closed. Here's where we opened. This air is what we call the gap. And so gaps like to get filled. It's like an open window. They want to close that window. So gaps do fill. They don't have to fill today, tomorrow, next week, next month, or even next year. But when there's a gap close by, that is a magnet and they tend to fill. So this is exactly what we did. We pushed up, we hit that 7,000 target, just what they were wanting to do. 7,002, I believe, was the high. We pushed up and then immediately came down to fill the gap. So now we are turning, it looks like, created a bottom here. Let's see. And, it looks like we're starting to bounce a little bit off that bottom. So we'll keep watching that. And what I want to see is I want to see us get back up to the VWAP. That's this heavy white line here. All right, so we're bouncing nicely. We are getting a stronger looking MACD. So our MACD is starting to turn brighter green. That tells us we're getting a little bit more momentum to the upside. So let's see, we tried to come up here and tag the VWAP once before and we rejected. So let's see if we can come up and test it again. That is what I'm watching for. All right. The other thing I'm always looking at is looking at the VIX. So the VIX gave us a little move down here and it's kind of hovering right now, but it's been climbing. Of course, we've been dropping. So the VIX all this time has been climbing. So I'm always watching the VIX here. So let's see if we can continue this upward push. It's been a bit negative trying to fill this gap. So, and that's really common. When we hit these all-time highs, lots of times we get these reversals. Super common. But this being an FOMC day, usually what we get on FOMC days is some type of range-bound choppiness, right? So even though we are coming down, we didn't come down that far. And could we be kind of just trying to create a range here? I think we could. I think we could be trying to create a range here. So watching for that. So VIX is one thing I look at. I call it the leaderboard. It's my watch list. That's the other thing I'm looking at. I'm looking at who are the leaders of this move, right? So right now, the leaders to the upside are, and I'm going to just look at the Magnificent Seven, because those are the guys that lead the S&P 500 and they lead the NASDAQ. So I'm going to be watching what the Magnificent Seven is doing so far this morning. And we've got a little bit of a mixed bag. And here's why. We've got big earnings coming up. So there's a lot going on here. So for the leaderboard, we've got NVIDIA up at 1.6%. That's pretty good. We've got Tesla up at just 0.4%. So Tesla kind of lost its edge this morning. It was up higher and it's come down a little bit, even though it is still elevated, has come down from its high this morning. That's about it on the leaderboard for the Magnificent Seven. The rest are looking a little bit red here. So we've got Microsoft down 0.1. We've got Google down almost 0.2. Netflix, nope, sorry, they're not part of the Magnificent Seven. Meta is down 0.4. Amazon down 0.6. Broadcom down 0.8. Apple down 0.8. Let's see, did I catch Google? Yes, I did. So by and large, the Mag 7s are down a bit. The Mag 7 as a whole, as a group, you can look at them under the ETF of MAGS, M-A-G-S. That's an ETF that houses all of them, and it'll give you kind of a cumulative. Right now, the MAGS as a whole are just down about 0.03%. Not too much, not too bad, basically sitting on their flat line. All right, getting this push here, kind of continuing upward. Let's see if we can keep it going here. What we want to see is a test and a break of the VWAP. But it's been a little bit rangy here. So it's just not moving much. This is very range-bound behavior. We hate that. That is kryptonite to the day trader, to the scalper, this sideways baloney. So if we can get a nice V-shaped recovery here, we might trade across of the VWAP here. So I'm watching for that. If we get there, it's a few points over us. So maybe about 5 more points or 50 cents on the SPY. Still moving that just a little bit. It's very slow, not super fast. All right, Audrey got into a call about 30 minutes ago, praying it comes back up so I can at least break even. I hope so too, Audrey. I am also holding a call, waiting for it to come back. So I'm with you on that one. Looks like the VIX is giving us a little bit of a slowdown here, so that'll help. All right. So right now we're sitting on this level right here, which is, this is an indicator. It's called the volume profile. And this red line here is what's called the point of control. So the volume profile looks at volume and it shows us where the majority of the trades are being placed. That's this point of control. So that red line says this, based on volume, this is where the majority of trades are being placed right here at this level. So that's where we just keep going kind of over under. We see that behavior sometimes with the VWAP. It's a very similar indicator. The VWAP gives us the volume weighted average price. So it's a little different, whereas the volume profile is giving us straight volume. The VWAP is giving us average price with volume. So that's why there's a little difference. Sometimes they're exactly the same. But right now we're just kind of over under this point of control. So we just waiting for this chop to give us a break. But again, on FOMC days, a lot of times it is just chop. Sometimes that's just what we get. All right. Good morning, Anna. Good to see you. And I'm just looking at some other charts over here, keeping an eye. So overall, we're in a downtrend, right? You can see from this high here that we hit at 15 minutes after the open, lower high, lower high, lower high, lower high, lower low, lower low, lower low, lower low. So this is a downtrend, pretty clearly defined one. Either we continue trending down or we turn and break the trend and either go sideways or go upward. That's what I'm looking for, is a move back up into the range, but we will see what we get. Again, they'll bring it to different levels, and then on FOMC days, sometimes they'll just sit on it. They'll just sit on it and let it go sideways while the market waits for what's about to happen, right? All right. If we turn and change this whole moving average, so right now, the whole moving average, that's this one that goes from turquoise to magenta. Right now, so magenta kind of shows us downward movement. The turquoise, when it's turquoise, it's showing us upward movement. It's a very short average, so it's going to have a lot of false positives here. You see them right here. That's a false positive. That's a false positive. So you see them because this is a short average on a short time frame. So it's only something to give us an indication. We can't just trust it all by itself. But if this magenta turns to a blue and our MACD turns and brightens up again to the upside, we could consider some calls here. Like I said, right now, it's just not doing much of anything, kind of staying, even though it's downward trending, it's not moving very fast or very far. We haven't gone too far today. And our VIX is giving us a slow rise. So we have to be aware of that. If we're trying to trade to the upside and the VIX is giving us a slow rise, we want to watch that, because remember, the VIX runs inverse to the market. If the VIX is up, usually the market is down. If the VIX is down, usually the market's up. And that's because the VIX is gauging fear in the market. So when the VIX is up, the market is more fearful. When it's down, the market is more complacent. So as we wait to see if this turns upward, what we want to see is that the VIX would also be turning downward. And so far, it's not. So far, we're still kind of pushing upward, and we are getting a small downward move here. But again, we're holding this point of control. So I'm not interested in a put just yet. If we lose this point of control and we continue downward, we might think about it. But right now, no put for me at the moment. No call either. So we're just waiting. VIX is at 16.9, so that is creeping up. That is something to be aware of. It is slowly creeping up today. We also have gold and silver creeping up. That tells us sometimes that we could see rotation into precious metals. We've been seeing a lot of it, right? Everyone knows gold and silver are going crazy. And so what does that really mean? In the past, it's meant a flight to safe haven. So we've seen the market, even though it's crept up a little bit, we really haven't gone, again, too far. So could it be that we are rotating into safe havens, precious metals as a safe haven? It could be. It absolutely could be. So we will be also watching how that goes. So gold and silver up on a day when we are making a new all-time high is kind of like, let's keep our eyes on it, because now we are moving down. All right, still holding the point of control. And we have been really for a while, really almost an hour, kind of, even though we dipped under it, we came over it, and now we're just at it, just slightly under it. So let's see, if we come down and make a new low, we could consider, if we break this low, we could consider getting into puts. So I'm watching that. Just under that point of control there. And we're just at yesterday's close. So we're about 1 to 2 points above yesterday's close. That's what I call the flat line. That's where they filled the gap. Right there. So what we're watching for is either this to drop down below this low, or this moving average to turn and move up. That's what I'm kind of watching for right here. And right now it's just sideways. There's no real volume, no real strong movement, even though we have, like I said, this downtrend. It is downtrending, but no real strong movement to the downside or, of course, to the upside. All right, and that VIX just still giving us that slow grind up. So let's see if we try to hold this current bottom here or we break down through it. Let's see what our mags are doing. They're still They're still kind of negative, down about 0.15%. So this is a negative chart right now. Nothing here to, no calls here yet. So we're right here at this bottom. Let's see if we break it. BD, 696 put in at 180, set to break even, looking for 2. Good luck. Good luck, BD. We are right here at this temporary bottom. Let's see if we hold this or if we continue downward. A little bit of volume coming in on this candle. So sometimes when we see volume come in, it can be a continuation of the pattern, but a lot of times it's a reversal. So let's see what happens here. Eggie is here. Good morning. Eggie, your strategy is like this time, all time with a 90% win rate. Yeah, most of the time it is, Eggie. Usually I'm winning about 9 out of 10 trades. Sometimes it dips into the 80s. And sometimes it goes into the mid 90s if I'm really having a good week or month. But yeah, it's roughly about 90%. All right, so there's a little, let's see, we got a little wick down past the bottom here. BD out at 199. Great. Good for you, BD. That was a nice quick 10% win. That's the way to do it. Nice scalping. All right, let's see if we can hold this little bottom here. BD ran out of patience. No, I think you did the right thing because we are at this little bottom. Now we could break it, but right now it is trying to hold. So let's see. We are just below our flat line, about 1 point below our flat line. But the VIX is still giving us a little rise here. All right. Holding here for the moment. And that was a lower low by a hair, by just a hair. So they continued down with that lower low pattern, but it's really close to a double bottom. So let's see what we get here. Again, looking for this whole moving average to turn and start looking blue, and looking for the MACD to roll up over the 0 line and turn green. If it doesn't, we could get another leg down. James Holston, good morning. Good to see you. Welcome, welcome. All right. So again, kind of hit this bottom, teeny bit of a lower low, and starting to get, looks like a possible reversal here. So let's see what happens. It's only one candle, and this is the minute chart, so anything could happen. And again, this is a negative chart, so we don't want to be too quick to jump into anything, to jump into calls or anything long, because this is a negative chart, so we have to recognize that. And we are a good bit below the VWAP. That's another thing to remember. So hopefully we hold the bottom here and we make a little bit of a double bottom. Let's see. It's only been just 2 minutes, so we've got to see it actually follow through. Audrey, feeling dumb holding on to the bad calls I took earlier. I feel you, Audrey. It depends on how far you're down. Usually my line in the sand is between 40 and 50%. And I usually don't hold past that. If I have a good reason to believe that it's going to turn and go in my direction, and I see a trade setup that would stand on its own, I will sometimes do an average. So, Audrey, it's going to depend on how far you are down and where you have set your stop loss. If you have hit your stop loss, then I would say get out. If you haven't quite hit it yet, I think we've got a little room to wait to see if this gives us a bottom here. Now, are we going to bounce all the way up before FOMC? We don't have to. They can pull it sideways at this lower level. What we do know is chances are, if it's like any of the other past FOMCs, we will see some pretty steep moves, spikes to the upside and the downside, both. One, the other could happen either way. We do know that that will probably happen. So the issue is if you hold those calls, and I don't know what your expiration is, Audrey, but if you hold those calls all the way out until FOMC, you could see a lot of theta decay, meaning that your value is going to crunch down. You're going to lose a lot of value waiting for FOMC. But it again, back to how do we decide when to stay in and when to get out? It's got to be by your stop loss. You've got to hold your stop losses. You can't hold a trade that goes beyond your stop loss, and you've got to set your own stop loss based on your own risk tolerance. Okay. Also based on the size of your trade. So that's my advice. If you're past your stop loss, go ahead and get out. If you're not yet, you've got some time to let this run. And it is giving us a little bottom here. So let's see, maybe we did get a little double bottom. That would be nice. Let's see if we can get this to move up. We got the MACD rolling over. We got the whole moving average, whole, let me say that right, whole moving average turning blue. So these are good signs. We're back up to the point of control on the volume profile. That's a good sign. So now let's see if we can get back up here and test this VWAP. We haven't been able to do that in a while. So let's watch that. Could we take a call here? Yes, we could. We have the signs. We have the moving average moving up. We've got the MACD moving up, but we are in a negative environment. So we've got to be careful of any counter trend trade. This currently is a downward trend. So I might wait for calls to see if we can beat this top right here. If we can build a higher high instead of another lower low, I might consider getting in to a call here. There we go. Up over the point of control. That's a nice little move. And right back down to it. So we haven't made a higher high yet. So let's keep our fingers crossed so we don't come down here and make a lower low, because that could be on the menu. Let's see what happens. All right. BD, Mel is giving out pure gold with this stream. If you feel you're learning, give her a thumbs up. BD, thank you so much. I appreciate that. That is really, really kind of you to say. Thank you so much. Yeah, thumbs up would be great. I appreciate that. Thanks so much. And again, I will be back today at 1:45 Eastern just to help us walk through what happens at FOMC. If you've never traded through an FOMC, it can be a landmine. It can be tricky. So we can trade that together. And again, we may not see any fireworks at 2 p.m. We may see some more movement at 2:30. You never know. But some days we get wild FOMC swings and other times not so much. And the market, like I said, the market already feels like we're not getting a rate cut. So there may be kind of just a muted reaction to the decision, but we could see some reaction from the statement and from the press conference. So I'll be here at 1:45 Eastern and we'll trade that together, okay? All right. Anna has traded FOMC, and thanks for going live. You're welcome, Anna. It's wild, isn't it? It can be a very wild day. All right, back down to this low. Looks like we're making a lower low. Don't like that. Here we go. MACD rolling back over. So this was a really brief little push here, and then it came right back down and gave us a new lower low. We're still in the downtrend, and this is why we have to be careful with any upward moves, right? That's why I set these as targets. This high now, these are things I'm going to look at before I think about going long. And the lows are not really that low, right? This is, let's see, 7 to 5. This is a 2-point difference, right? So you can't trade that either. There's just not enough juice there to make it worth the squeeze. So, all right. VIX still moving up just a little bit. Look at that, 16.99. That's the high of the day on the VIX. So let's see if it's going to continue to pop up. We do expect volatility to rise. Remember, VIX is the volatility index. It's the fear gauge. And on an FOMC day, we expect the jitters. You can think of it as the jitters of the market. We expect those jitters to intensify on an FOMC day. So we do see that VIX slowly creeping up all day. If we zoom out, you can see it, right? Look at that. Since the open, it's been a slow climb up all day. So the VIX is getting its jitters, and we have to pay attention to that. All right. So still no trade for me. Still kind of waiting and watching here. When it forms this kind of a channel, but it doesn't go too far, I kind of have the tendency to think that it's not, what do you want to say? Not totally real. Are we really dumping here? Not really. We haven't come that far. Yes, it's downward. Yes, the trend is down, but we just haven't gone that far. So at this point, you can think of it as almost a sideways market. It does have a downtrend, and we don't want to discount that. But you can think of it as almost a sideways market because we just haven't gone very far. So what that tells me is they're not super committed to pulling it down. Now, maybe they do. Maybe they continue this slow grind all day until 2 o'clock. They can do that. But as of right now, I'm not too convinced. We're kind of at our flat line here, a couple of points below it. So let's see what they do here. All right, MACD getting more red. The hull is back rolled over again. So, could we take a small trade to the downside? We could. It's just very slow right now. Unless they really pick up the pace, it's moving pretty slowly. So for me, no trade just yet. And this isn't unusual on an FOMC day. This is not unusual behavior. We see this a lot. Kind of not a ton of movement, usually sideways, maybe one direction or another, but not going very, very far. So far, it's kind of in keeping with what we would expect to see on an FOMC day. Now, if we turn and get this, big crazy drop, we could trade that real quick. We could get in and out of some puts real quick here. Right now, it looks like they're trying, kind of, no, looks like another lower low. Down 4 points from yesterday's close. Sitting right now, right on our overnight low. That's what this yellow bar is. So I keep lines on my chart for last night's high, last night's low, yesterday's high of day, yesterday's low of day, and then today's opening first 15 minutes range. So those are the bars I move around on my charts every day. Right now, we're right at the overnight low. So let's see if we get a response here. This has just been the slow grind down. So we've lost about 25 points. That's significant, but it's not huge. They can move 25 points in 2 minutes if they want to, in 1 minute. So it's significant that we've come down 25 points, but it isn't super far. If they were truly committed to selling, we would have seen a higher drop, a bigger drop than that. But that doesn't mean we won't get selling later. It just means right now we're not super committed to selling. We're more just slightly downward ranging. All right, so far, kind of slowing down here at the overnight low. VIX gave us a pop up to 17.01, new high of day, as we made a new low of day at the same time. NVIDIA still kind of holding its own, 1.4% plus. Tesla coming back up a little bit, 0.6% up. Mag's down still a little bit. So no reversal yet. All right. Still testing the overnight low here. Holding at about 3 points below our flat line or below yesterday's close. So again, not a significant drop yet. Still waiting, still watching. And while we're I'll keep this in my side view. Let's take a look at our daily chart so we can sort of get an idea of the bigger picture. That's really helpful. When you're not exactly sure what's going on, sometimes it's really good to zoom out and just get the bigger macro picture. So right now, we've got a pretty red candle here with a new all-time high. So here, this is the daily chart of the S&P 500. Here is our new high this morning. We made it right out of the gate. The first 15 minutes of the open, we hit that. 7,002 is our new all-time high. That's the level we've been trying to get to for weeks. That we've seen that gamma, we've seen that options flow, all pointing to that 7,000 level. We also have some options flow still overhead on the SPY at 700, which is going to get us to about this line right here, 7020 on the SPX. If the S&P or the SPY can hit 700, we'll probably jump up and hit about 7020 on the SPX. Now, that doesn't mean it has to happen today. Right now, we're getting this pullback. So let me zoom out so you can see. This is, and we've talked about this before on this channel. This has happened a lot of times where we come up and we make a new high and we immediately pull back from that. That's what's happening today. It's what's been happening for months, right? We can see these every time we hit these new highs, we pull back, new high, pull back, new high, pull back, new high, pull way back. Not quite a new high, pull back, new high, pull back, new high, pull back. Here is our new high today. Are we pulling back? Are we heading into a downward trend? I think it's very possible. I think we could very well be moving into some bearish markets coming into February, March. I think we could start to see this rollover now that we've hit this 7,000. Doesn't mean we can't go farther, but I do think that it's really likely that we start rolling back to the downside. We've had two strong back-to-back years, double-digit gains on the S&P 500. We're, in my opinion, in a bubble with the whole tech sector. I think we are. And so I think at some point we're going to have to start coming down here. But as far as today goes, this is a high and a pull, immediate high and rejection of the high, a pullback. So that's what we're experiencing right now. It just keeps dropping. So that helps us to get a picture, a bigger picture of where we're going today. Now, of course, the outlier is FOMC. Are we going to turn and get a huge spike up, or is it just going to crash at FOMC, or is it just going to maintain sideways? We don't know. FOMC is always a wild card. We don't know. That's why we'll trade it together and watch it. But this will give you an idea of our bigger picture. So every single time we hit a new high, we roll over. And that's what we're doing right now. So we'll wait to see if we can get this to push up toward FOMC. It definitely could. It's just not doing it right now. It's very negative right now. So that's kind of the overview on that. Again, I think moving into February, March, we will start to see some downward pull. But not until we're done with these levels. And are we done with these high levels? I don't know. I don't think we are. I think we've maybe got another push up. Let's take a look. The other thing that's helpful to look at is the volume. So if I come over here to our option chain, we can see I keep volumes on my chain so that it helps me to understand where people are positioning. So these are today's expirations, and I've got heavy volume on the put side sitting over here at 695. That's just overhead. We're 94.9. So 695 the put, followed by 696, followed by 697. Well, that's overhead. So be a move up possibly. And then on the call side, the highest of all of the volume on the call side right now is the which one is this? 699. Make sure I've got that right. 698. 698 calls. That's the highest volume, followed real closely by 697 calls, and then followed by the 700 calls. There's a lot of volume building at this 700 level, right? So we have to pay attention. Now, it doesn't mean we hit that. Sometimes we see this volume build and we don't hit it. It happens that way. But it is something to be aware of. So the other thing I also look at is the gamma. So I pay for a third-party app. It's called Cheddarflow, and it tells me where dealers are hedging. Where are we hedged? We are hedged right now to the upside, believe it or not. Even with all of this downward movement, we are still in positive gamma. And we have a call wall sitting at 700, which also matches some volume that we just saw at 700. So it is possible that we come up and try to tag that today, even with all of this negative movement. It is possible, but we don't have to. This gamma can change just like the volume at a moment's notice. It can change. Okay. So that's kind of those are the things I look at to give me the big picture. So in the big picture, we've got volume sitting just where we're at on the put side and a little higher, and we've got call volume sitting a little bit higher. So it is possible that we do see a move up. And then, of course, we'll have volatility. More than likely, we'll see volatility at the press conference today. All right, so still here trying to it's really trying to hold on. We're down about 6 points from yesterday's close. So we're still moving down. This is still negative. Let's get back to our futures. Still in a negative trend. You can still see it. We have not broken that. They are still building that negative channel. So that's why we got to be super careful with any kind of reversal trades. All right, Aggie, when is the press conference? Great question. That is going to show up at 2:30 p.m. Eastern. So the announcement, the rate cut announcement or rate announcement, will be at 2 p.m. Eastern. The uh, statement comes at the same time. So the statement can also move markets. And then the press conference will be at 2:30 Eastern. Again, I will be with you live to process that and to trade that together if we choose to trade it together. Okay. All right, Audrey got out of the calls at a 30 to 40 loss. Lessons learned today. That's why I'm only paper trading. Bravo, Audrey. It is not easy to take that loss, and I applaud you. Trust me when I say capital preservation is everything. Take those stops. A 30 to 40% loss is not a big deal. You can recover from that in 1 to 2 trades. So great job. Good lesson learned. It's a great muscle to build while you're paper trading. Build the muscle now of taking that stop, whatever you define that it should be. Build that muscle because that is huge. That is going to be the most important thing, is to preserve your capital. That's huge. Okay. So great job, Audrey. Great job. All right. And Eggie asking, what's it about? Great question, Eggie. Let's go over that. Audrey saying, take your advice. Moving forward, my stop loss will be around 10%. All right, Audrey, I personally don't keep a stop loss at 10%. And here's the reason why. You will stop out on most of your trades at 10%. You can place it at 10%. You can do like a 1-to-1 risk to reward ratio where you set your win at 10 and your loss at 10. And if your win rate is better than 50%, you'll be positive. You can do that. But you're going to get stopped out of a lot of trades at 10%. So just while you're paper trading, just kind of get a feel for, look at your winning trades and see how far did they go against you before they became winning trades. Usually a lot of trades will go against you for 10%. So something to think about. Back testing is the key there, Audrey. Just going back and looking at the trades you would have taken. How far did it move against you? How far did it go for you? And kind of back test and get that idea of what is your win rate and where should your stop loss be. So great job there, Audrey, taking that loss. I know that wasn't easy. So good job. All right. And then Eggie, what it's about, Eggie, is the Federal Open Market Committee sets the federal fund rate for the whole United States. In effect, it's the rate at which banks lend to each other. So just because they cut interest rates doesn't mean that we're going to see a mortgage rate decrease or a credit card rate decrease or any other rate decrease. It sometimes trickles down, but what it really represents is the rate that the banks trade with each other, the rate that they loan each other money. They're constantly pushing money back and forth. And what is that rate at? As that rate becomes lower, and the feds enter into what we call quantitative easing, where in essence they're printing money, we see liquidity coming back into the system. And as liquidity comes back into the system, the economy, it automatically filters its way to the stock market. So the stock market loves the lower rates. They love the quantitative easing, even though at the same time we are raising inflation. So that is, in a nutshell, Eggie, what the FOMC is looking at. They have monthly meetings. Sometimes they skip a month, but usually they have a monthly meeting, and they are going to talk about where the rates should be set. And they look at two main things when they set the rates. They look at what's the inflation of the country, and they look at what is the labor employment rate at. So what their mandate is, what the FOMC mandate, they have a dual mandate, that is to keep inflation low and to keep employment high. Sometimes those mandates, those are at they're in conflict with each other. Sometimes if you want to get labor moving, okay, that's a big drop here. So we're losing our little area that we were just at. Let me finish up my FOMC thought, and then we'll look at whether we want to get into some puts. The that dual mandate sometimes is in conflict with each other, and the only real tool they have besides the balance sheet is, all right, the only real tool they have besides the balance sheet is the rate, raising them or lowering them. And that is how they try to manage the economy. So that is what it's all about, Eggy, in a nutshell. I hope that made sense. That's what we will find out today. Now, again, we all pretty much know they're not going to touch the rates. We're going to remain the same, but are we going to moving forward, what is the view? And that's what the market wants to know. All right, I am going to look at some puts here, even though we've come down quite a bit. It might not be the best time. I'm just looking right now at the 695 puts, but I'm not in them. I'm just looking. That was a big downward candle there. Okay, sort of holding right now. Okay. So you can see that this has just been consistently downward, but slowly. This big candle changed that dynamic a little bit. And I'm just watching to see. They're going to try to pull it up here. If they start with another candle down, I might take a put here. All right, you're welcome, Maggie. Volume building on this candle. Got a nice 20% went on the 695 put, so I'm chipping away at my earlier loss. Audrey, that is the name of the game. You just nailed it. Congrats. Nicely done. All right, little hold here. Looking a bit weak. Looks like they might. Let's see. It's a little bit weak here, so it's not really trying to reverse just yet. All right. Small green candle forming. So no puts yet. Came off that bottom just a little bit. If we lose this little teeny bottom here, I'll probably jump onto that put. Just kind of holding it right now. There goes our VIX giving us a little move. 17.18 is the high of day on the VIX. And our mags are sitting at about 0.38 negative. All right. Let's see if we try to hold it here. No real strength showing yet either. So the trend is completely intact, the downward trend. So don't be fooled yet into any upward moves. We're still in a downward trend. We need to see a higher high, which we haven't seen yet. We haven't seen one higher high. So right here would be the most recent high. That's where we would need to see it start to push through. Or here, you could see it here. It's basically back up here to this overnight low. All right, guys, we're getting close to the end of the stream. Didn't take a trade this morning, but that's okay. On FOMC days, it's usually pretty slow like this. We'll start to see the fireworks later. I'll be with you at 1:45 Eastern, and we will traverse that together. So join me. We'll see if we get some movements. We'll see if we get some volatility. And if we do, that's a lot of fun. It's also can be dangerous. So we'll work through that together, guys. And I appreciate you so much in being here. I am really grateful to have you guys joining, and join me again today at 1:45 Eastern. And then again, we'll be back tomorrow morning at 11 a.m. Eastern. So thank you so much, guys. I appreciate you. I love your interactive and your just sweet, supportive nature. All of you have been very awesome on this stream. And we will see you a little bit later today. You guys take care, and talk to you soon. Bye for now.